I can't find anyone within our industry who has any longevity, experience, or credibility who looks at this as anything other than a simple correction. A couple of things have happened that really added fuel to the down spiral on this, and these things have pretty much played out, I might add. Once the prices started to fall and the margins were increased and the prices started to fall more, you ended up with a lot of hedge fund managers who really have had a lousy year, and the only profits that they were booking were their profits in the precious metals, typically through SLD and GLD. They typically don't own physicals. They do it through the ETFs so they can buy and sell large blocks.
Sure.
And they're all anticipating redemptions at the end of the third quarter in October. So they sold their winners to come up with cash to cover some of their losers and also to have money for redemptions. And on top of that, at least if what I read is correct, you have George Soros completely out of gold and Paulson either having sold a lot or about to sell a lot. And that scared a lot of the hedge funds out of the marketplace. And these people, their playground, their sandboxes in COMEX. That's where the pull-down took place in paper. When it came to the physicals, the Indians, the Russians, the Chinese, the Arabs, and even retail buyers in Europe and here in the U.S. are buying up everything they can get their hands on. We're just looking at the hedge funds readjusting. We're looking at an engineered fall, giving J.P. Morgan a chance. Probably they've reduced their short positions by between $1 and $2 billion. It's a chance for them to kind of get out, although they're still sitting with at least in silver alone $2 to $3 billion worth of shorts in silver and billions in gold. You know, these big bullion banks who've shorted the market all the way up on the rise, they need a takedown like this once or twice a year in order to get themselves somewhat out of trouble. But they can never fully extricate themselves from the problem. And if the CFTC actually does limit the number of contracts that they can own, it will force them to sell out against themselves, and the prices should rocket.
Well, let's talk.
I think we'll have a great fall.
Do you? Okay, well, I do too. And I know that there's some of the people that we follow out there that are still pinning $100 an ounce or more by the end of the year. I think that's aggressive, but I definitely think that there's not much other way to go but up, personally. Let's talk a little bit about the CFTC. If you had to give odds to the CFTC actually enforcing the law, what do you think the chances are? I would give it less than 10%, personally.
Well, they haven't so far. They should. That's what they're paid to do. They're paid to make sure that we have a freely traded market without market manipulation. But what you witnessed starting back in 1999 with the end of the Glass-Steagall Act and with the Commodities and Exchange people refusing to prosecute or enforce the existing laws, there is no regulation. The Glass-Steagall Act, which kept the big banks from becoming investment bankers where they could take depositors' money and leverage it, are allowed to go crazy. And you know, we've witnessed a crash in 2008, and we're on the verge of another one again because of leverage. These people can go into the gold and silver markets and leverage it 40, 50, 100 to 1. So they distort the figures. And you're right, gold and silver should be higher than they are. In fact, adjusted for inflation, for gold to equal the peak of 1980, it would still have to be around $2,400 an ounce. So we are very, very cheap when it comes to gold. And as far as silver is concerned, if you took J.P. Morgan out of the silver market, we'd have $100 silver. And I think that day will come, but not by the end of the year. I would be thrilled to see it back at 50. I would be happy to see gold back at 2,000. I think those are realistic numbers. And I might say, having been in this business since 1983 and doing very well indeed in this business, because I'm so comfortable with what I do and I see what's happening and understand it, I have about 95% of my net worth still in precious metals, in gold and silver and mining shares, and probably two-thirds of it are in silver or silver shares.
Sure.
So no one is more bullish on silver than I am.
Absolutely. Well, we know that about you, David. We did an interview a few months back in which you said that you were selling some of your gold to buy more silver, in fact. So we know that you're very bullish about the long-term silver story. Before we wrap, is there anything else you wanted to share, anything that we haven't covered yet?
Well, a couple things I'd like to talk about. I'm in the industry of selling gold and silver. For every 100 orders we do, 99 are things we sell and 1 are things we buy back. This is a market where, at least in our industry, no one is selling. The thing there are two things I'd like to point out that I think are very great opportunities, and that's beyond the price of silver. Platinum is $15.16. It's about $100 below the price of gold. That won't continue. It's rare indeed over the last couple decades where platinum doesn't sell for 100 or hundreds an ounce more than gold. So if you want to buy something truly at a discount, and I would say with no possibility, no reasonable possibility ever of a confiscation, then pick up some platinum at these prices. It's a far better buy than gold. I would also say that semi-numismatic coins like the circulated or low-grade $20 double eagles, the Liberties, or especially the St. Gaudens, they're selling for very little premium over the cost of the bullion coins. Sometimes that premium can go way up, but now it's just a few percent above the cost of an American Eagle bullion coin. And when the premiums get that low, that's a great buy. So if you're interested in buying gold, consider at least, if you can get them at a really good price, St. Gaudens circulated near the price of Eagles, or platinum in place of gold, and you can't go wrong buying silver at 30. Even if it drops another few dollars, it's not going to stay there. And the match to the fuse could well be the CTFC meetings in less than a month. So I'm very optimistic. I mean that honestly. Bad for my portfolio the last few days, very good for business, but my portfolio will come back. Good luck to all of you out there. This is a gift courtesy of the bullion banks and the folks on the COMEX. Take advantage of it.
Very well said. I was going to ask you for any final words of advice to those out there who are maybe a little too frightened at this point to continue buying. My response has been dollar cost average. I've never advocated anybody going all in on silver at any price. If you dollar cost average and if you've got the right mindset, the only way you can look at this is as a great opportunity. Or
if they're nervous about silver, and silver is very volatile, much more so than gold, just consider the fact that you're looking at $2,000 gold around the first of the year, and it's sitting now at $1,600. Just do your purchases in gold, not in silver. Look, wait, see what happens. The downside is very limited from here. As long as you've ridden it down this far, stick it through another 5%. I think you can allow yourself to do that. Other than that, you're looking at an upside of 25% and up, and I think you really have to take advantage of this kind of a risk-reward when it comes to the metals.
Well said, David. Can you also tell folks how to get that incredible newsletter that you write? I read it daily. I get the update.
A couple of things on the newsletter. The reason that I format it the way that I do is I assume that most people don't have nearly the time that I put into reading, and I read hours and hours a day, just about everything that's worth reading, and I condense it in one newsletter that you can read in 15 or 20 minutes, the best of what's being said every day by the best of the writers out there. So just go to milesfranklin.com, milesfranklin.com, and in the upper right-hand corner of our homepage is a little bar where you just type in your email address, and you will automatically receive it free. And if you read nothing but the Miles Frankiln Daily, you would know everything you need to know, and I say that humbly, but it's the truth.
Yeah, you really do cherry-pick the gems from all of the best people out there on a daily basis, so it is really the one must-read newsletter that I make sure I see every single day. Well, David Schectman, founder of Miles Frankiln Precious Metals, we really, truly appreciate your time in this very tumultuous time for precious metals investors, but we both agree that from here, there's a lot more upside than downside. So thanks for joining us, sir.
Thanks, Sean. Talk to you again.
All right. Bye. Take care.
Well, friends, thanks for all your support. Be sure to check out sgtreport.com for all the latest. Good night.